All right, good morning, everyone. It is 8:50 in the morning of February the 4th, 2022, and this is my pre-market strategy session. A little bit late getting into the office today. It was rainy, traffic. I don't know what happens to people. I live in Maryland, and I don't know what happens to people when it rains. People in Maryland really just lose their minds. They don't know how, they're like, oh my God, I don't know how to drive. It was crazy. So I have a morning commute that usually lasts about an hour. I drive my son into school. Pardon me. I drive my son into school, which is across town, and I drive back across town again to get to my office. Pardon me. And so, yeah, the morning commute was about a half an hour longer than usual today, and it was just really like, oh God. Anyway, I'm starting off with gold here, and you can see gold right now is just getting, I don't want to say the bottom's dropping out here, but there's been a 20-point move in gold here in the past 10 minutes. And the reason for that is that the 10-year here you can see is spiking. Interesting thing happening here where people are just getting the heck out of bonds, in particular long-term bonds. I think that this is going to be short-term. This doesn't last much longer. There will be, because we are going into a period of economic softness, there will be a move back into safety and bonds and so forth. So as this thing continues to run up here past its risk range, its risk range here is 186 at the high end, 171 at the low end. It will be an opportunity to start averaging into a short position on the TNX as these, or actually, I'm sorry, long position, short the rates, long the bonds. The market is going to overdo it. The bond market tends to not overdo it so much, but they still do. So eventually these rates are going to start coming back down again, and the bonds will start rallying in price. And gold, until these rates start coming back down again, gold is going to suffer. So I'll be just really kind of gauging my bond buying with my gold risk range. So gold started to head back up to the middle of its risk range here. Now it looks like it's going to dip back down to the bottom of its risk range. And when it starts getting to the bottom of its risk range again is where I will start buying bonds, going long bonds for the fall. We're headed into what would usually be a period of softening. The Fed would usually be like loosening standards, loosening lending standards in order to spur the economy on. But because the Fed has decided that it's going to tighten, it's tightening into a slowdown. So if the Fed gets it wrong, which they usually do, then they're going to exacerbate the severity of the slowdown. It's possible the Fed could say, hey, we're gonna reverse policy and so on and so on. It's possible. We'll see what happens. Okay. So the SPX, actually, you know what? Let's look at the SPY or at the E-minis, because this is my risk range. We'll go back to that. I'm going to open up a new window here so we can go back to that easily. Let's go to large caps and stuff here, and you can see the E-mini S&P overnight. Here's the 10-minute. Here's yesterday's close. Really interesting. And then as soon as it closed, Amazon reported, and the E-mini S&P just ramped up big time. And I was pretty happy with myself at that point because I had puts on that I'd averaged into over the previous 3 days, over the previous these 3 days right here, I averaged into some puts and some shorts on these 3 days. And the market put in this giant move to the downside right here. And I was like, okay, you know what? These things are profitable. I don't know what's going to happen tomorrow. There's some reports coming in. I'm taking profits here. Now, profits weren't all, it was profitable. Not all that great, better than zero, better than red, but still, after seeing what happened in the aftermarket right here on this gigantic run up here, this is a 50-point move in a matter of 20 minutes to the upside, which would have been against me. I wouldn't have been able to sleep last night if I were still in this position. But here it is getting closer to the opening bell, and it's just sold off, like more than completely. It's sold off and is lower than yesterday's close, significantly lower. So I get to be happy with the money that I made. Definitely could have made more if I just stayed with it, but I would have been sweating this move big time in the after hours. So, okay, what's going to happen today? I have no idea. I really, I usually get into the office by 8 o'clock, which is about the earliest that I can get in. And so usually before I do my pre-market strategy session, I have about a half an hour to kind of measure what's going on today. I really haven't had the time to figure out what's going on, exactly, like to get a notion of which way things are going to go. If I had to call it right now, I'd say it's going to be bearish. But that doesn't mean at the open, that this thing is going to catch support and start running up on, Amazon's bullishness or, Google's bullishness. I think there's a lot more bearishness out there with Facebook. Oh gosh, there's a list of them here. Let's see. Microsoft is bearish. Let's see, what is Apple? Let me see here. Here we go. Okay, so Microsoft bearish, Apple bullish, Amazon bearish, Facebook bearish, Google bullish, Netflix bearish, Tesla bearish, Bitcoin bearish. So there's a lot more bearish sentiment out there than there is bullish sentiment. So, my guess is, that we continue to the downside. From this point forward, I don't know. But I will be looking for opportunities to short today rather than opportunities to go long. So I'll be looking for short setups. I'll be looking for put setups. So, okay. So let me go back here to the risk range here. The SPX, this is a pretty messy chart. Let me clean it up a little bit. It's a little bit easier to see. There we go. So the SPX hit the top of its range here on the second and really took off to the bottom and is now taking off to the downside here. So there's a gap. Actually, I should get rid of this these two lines right here. This gap was taken out. So that gap was filled. There's a line of support there. The next gap is down here in the low 4,000s, right here in the 4,000 range. And I don't know what this is. Maybe this is just a level of support. I'll get rid of it. So yeah, here's the SPX. And if it opened up right now, it would open up a little bit lower. And so, after it goes off the top of end of its range, it just has a tendency to go toward the bottom end of its range. So I'll be looking for bearish setups. NASDAQ, same thing with the NASDAQ. NASDAQ came into the inside of its range here. And again, I'll be looking for bearish setups, bearish opportunities. And I'll be using the relative strength system that I like to use, which is, I'll show you. The VIX, the Russell, again, also, if I play, I usually don't play the Russell. But the Russell is definitely, I think it's gone bearish. I think it has hit the 20% down level right here. It's at 19% down. So let's see what the IWM is doing. Where is there it is right there. So the IWM is, I think, teetering right on the edge of being in a bear market here. Let's see. Yeah, it's right over the 20% level. negative 20% level. So yeah, I might pile on to the IWM today. The Qs and the SPY are probably still not quite 20% down yet. So I might look more toward the IWM than the Qs or the SPY today, but we'll see. Oil is unstoppable. This thing, U.S. oil is just on a tear. Here's the top end of the range. So this will be a trade for me. I'm just waiting for USO to hit $68.80 so I can short it. I don't know if there's going to be a trend reversal up there. I don't know I do know that there's going to be a bounce right there. It could blast through, but it's not going to do it all in one day. It might pop through, but there's going to be at least a look above and fail, or it's going to hit that level and turn around for a percentage or two or something. So I'm just kind of waiting for 68.80 on USO, and then I will look to trade it. This is not a long-term, it's interesting. Here's the bottom of the gap. This gap was formed back here in March of 2020. And here it finally came back to recover right here. And this is essentially just all I'm looking for right here is this similar sort of action. Once it got to the bottom of the gap here, there was this reaction, quite a significant reaction. I don't know if I would have caught that much. I don't know if I would have been willing to short it and stick with a short on USO for that long to profit that much. Quite a move, though. Let's see. This is 10 or 15%. Oh, 21%. Wow. Negative 21%. But then it got its act back together and hit that level and pushed through it. Textbook. Textbook move, really. Just what you'd expect out of a support and resistance zone. Came, tested it, failed, moved back up toward it, second time, blasted through it. Nice to see. Actually, it punched through it, came back and retested, and then moved on, and then came back again and came close. I mean, this is just perfect textbook maneuvers right here. Perfect textbook price action. And so it's going to do something quite similar to what it did over here, right over here, wherever it hits up here. We'll see a very similar reaction. So, okay. That is the strategy for today. Let's see. There's something else that I put on. What did I put on? Oh, yep, USO. So SPY, the Qs, Tesla. Let's take a look at Tesla. Let's go to the daily here. So yeah, Tesla came off. So the top end of the range is 972 on Tesla. But I've got the bottom of this breakdown candle as being the real sort of support and resistance area. And yesterday, it made a stab for this thing. It opened up low yesterday. Let's see, it opened up down here at the 880s. Made a run all the way. Made it run for 943. Came up short of this breakdown area right here, this breakdown line right here. Couldn't do it, and then pretty much let go of all of yesterday's progress before the close. I think it happened like after 2 p.m. I think yesterday is when Tesla decided to, so Tesla made its peak at 11 o'clock, and then it made a stab here at 1:30 to try and go higher, and just couldn't do it. So yeah, after 11 o'clock yesterday, it could only get, a few points away from this 943 area, 4 points away, it looks like, 7 points away, and then just spent the rest of the day trailing off. I imagine that's going to be what happens for the rest of the day. I mean, we're getting into a risk-off period, or at least a slowdown and a cautionary period. And Tesla's price to earnings is still 293. This thing has dropped more than 30% in the past few weeks here. Let's see. Here's its peak over here. Its peak was around 1,200 or so, something like that. And then its trough, it's dropped 36%. And I remember looking at it, looking at it somewhere right around in here, and its PE ratio is still above 500. So in a risk-off period, or at least in a period when people are easing up on risk, price-to-earnings ratios, above for a tech company that's even a growth story. Growth, I mean, anything above 50. I mean, really, anything above 50 is too much risk. And here it is sitting at basically 300. I mean, this thing could see a 20%, or I'm sorry, not 20% correction, but suppose this thing corrected to a price to earnings ratio of 50. I mean, roughly speaking, that's an 80% correction. I mean, 80% correction puts Tesla's stock. Let me see here. So right now it's at, we'll call it $890, $890 times 0.2. It's an 80% correction. Puts it down to 178. I don't know. I mean, it's a huge move down. Enormous move down. I mean, could happen. I mean, here's Tesla stock in January of 2020. Here it was at $96. And I know there's been a split in between there and stuff like that. But I mean, in relative terms, it's around $100 right here at the beginning of 2020. I mean, we're only 2 years later. It's only 2 years later, and this thing's gone up 8 times, 800% in 2 years. I mean, it's going to correct. It's a great company, but it's going to correct. Could be a huge correction, here in the next few months. So, all right, everybody. That's going to be my pre-market strategy session. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at Monday's strategy session. All right, I am out.